analyzing the economic impact of another foreign war. This week's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. Well, as most of us are aware by now, the terrorist group Hamas launched an attack on Israel last Saturday, killing hundreds of civilians and taking dozens more hostage. The Israeli response was swift, bombing Hamas positions in the Gaza Strip. The unrest in the Middle East is not new, but it is alarming. The human cost can be difficult to process and is, of course, the priority for us as we process what it means. But with that, as Americans, we also consider our livelihoods and our financial future. So how should we react as investors to the violent eruption overseas? Well, initially, the stock market shrugged off the news. The S&P 500 index rose 0.3% on Monday, the first day of trading after the attacks. And as we record this segment, the index is up more than 1.5% for the week. And historically, you might be surprised at how the market has reacted to a geopolitical crisis. Here's a chart provided by LPL Research that shows some of the worst global events of the past 82 years, going all the way back to Pearl Harbor. As you read that chart with me from left to right, it lists the event date of December 7th, 1941, followed by the market reaction the following day, which was down 3.8%. The next number is the max drawdown following the attack, meaning this is the lowest the market dropped. As you can see, that is 19.8%. The last two numbers indicate how long it took to reach the bottom, which in the case of the Pearl Harbor attack was 143 days, and then how long it took to recover the losses, which was 307 days. Now, the Pearl Harbor attack thrust the United States into World War II, as you know, so that created great economic and market uncertainty. If you scan through the other crisis events, you'll see much smaller drawdowns and much shorter recovery times. One of the surprises for me on this list is the September 11th terrorist attacks. The market dropped 11.6%, but it only took 31 days to completely bounce back. The most recent crisis prior to the current Israeli-Hamas war was the escalation of the Russia-Ukraine conflict. And you can see the max drawdown was just 6.8%, and it only took 23 days to recover it. At the bottom of the chart, you can see the averages. On average, it takes less than 20 days to reach the bottom of any stock market pullback following a crisis event. And it takes, on average, just 42.3 days to completely recover the losses. Now, I think it's important to take away a couple of things from this chart. First, in most cases, the more involvement the United States has in a global crisis may determine how long the stock market responds negatively. And at this point, it is certainly too early to tell how the U.S. will respond to the Israeli-Hamas conflict. And second, what's happening with the U.S. economy independent of the global crisis event also matters. For instance, you could argue that the stock market drop in 2022, around the time that the Russia-Ukraine conflict escalated, was also due to high inflation and the beginning of the Federal Reserve drastically hiking interest rates, along with fears about a recession. The bottom line is the list of geopolitical crisis events is long. If you take a long-term approach to investing, the stock market tends to take these events in stride, and your investments could possibly only be affected for a very short amount of time, if at all. Thanks for watching.